Stock Trading Course 2. In this class, let's continue to study the stock market history. So, when was it happened, how was it operated during the history, and any milestone stories especially for those market peaks or crashes. Also, a few giant legends regarding those famous stock market traders and investors. At the early stage, when it started, it was NYSE on 11 Wall Street in 1688. That's the year officially the New York Stock Exchange was opened. It is also recorded in a history book called Business Adventures by John Brooks in 1968. After that time there are a few other stock exchange markets in the world's major cities, such as like Nasdaq in New York too. CHX in Chicago, TYO in Tokyo, HSI in Hong Kong, LSE in London, DAX in Frankfurt, TSX in Toronto, for New York Stock Exchange, the famous index which is Dow Jones. These markets all have the index indicator symbol names as well for traders to follow every move of markets. Let's give some emphasis points and shocking charts regarding those milestone peaks and crashes in the stock market history. The first one should be in 1929, which is called Great Depression. Began around September 4, 1929, last between 1929 to 1932 for 3 years. For October 28 and October 29, the Dow Jones Industrial Index, DJIA, fell more than 20% over those 2 days. The stock market eventually fell almost 90% from its 1929 peak, while international trade fell by more than 50%. Unemployment in the US rose to 23% and in some countries rose as high as 33%. The second was in 1987, the famous crash on October 19, called Black Monday. On Black Monday, the DJIA fell 508 points, 23%, for a single day. 23 world stock markets experienced a sharp decline in October 1987, including 8 markets declined by 20 to 29%, 3 by 30 to 39%. Malaysia, Mexico and New Zealand, 3 by 40 to 50%, Hong Kong, Australia and Singapore. It took 2 years for the Dow to recover completely. And the third one is 2002 crash, which is called the dot-com bubble crash. The Nasdaq chart index spiked then fell sharply as of the dot-com bubble. Before the crash, with the technology-dominated Nasdaq index rising from under 1,000 to more than 5,000 between the years 1995 and 2000. Things started to change in 2000, and the bubble burst between 2001 and 2002. Tumbled from a peak of 5,048 on March 10, 2000, to 1,139 on October 4, 2002, a 77% fall. It took 15 years for the Nasdaq to regain its peak, which it did on April 24, 2015. By the end of 2001, a majority of publicly traded dot-com companies folded, and trillions of dollars of investment capital evaporated. The fourth one should be 2008 crash, which is called the Great Recession or Second Mortgage Crisis. Began in the US officially in December 2007 and lasted until June 2009, thus extending over 19 months on October 9, 2007, the Dow hit its pre-recession high and closed at 14,164 by March 5, 2009. It had dropped more than 50% to 6,594. On Monday, September 15, 2008, Lehman Brothers declared bankruptcy. Then the stock market crash of 2008 occurred on September 29, 2008. The Dow Jones Industrial Average fell 777.68 points in intraday trading, until the stock market crash of 2020. It was the largest point drop in history. By the summer of 2008, the country's 2 biggest home lenders, Fannie Mae and Freddie Mac, had been seized by the US government. More than 500 banks failed between 2008 and 2015, compared to a total of 25 in the preceding 7 years. Investors bore the emotional scars from the crash for the next 4 years. Investors in the market were hit hard, 93% were affected and 80% said they lost money in the market. Even though the S&P 500 had grown 80% since March 2013, 65% of those who were affected by the crash said that they have not fully recovered even in 2018. Also this time just happened in 2020, which is called the pandemic crisis or sharp depression as well. In 2020, however, the coronavirus pandemic, which is currently the most 100-year impactful pandemic since the flu pandemic of 1918 began, decimating the economy. Total corporate debt was about $51 trillion in 2019, compared to $34 trillion in 2009. Though the crash began on February 20th, selling was intensified during the first half of March to mid-March. During the crash, there were multiple severe daily historic point drops in the global stock market. The largest drop was on March 16th, nicknamed Black Monday, of 12 to 13% fall in most global markets. DJI almost 3,000-point historic sharp down and triggered two-time stock market circuit breakers during one trading day. After already 6 straight breaking recorded biggest historic down points since February 27th. In the 33 days between February 19th and March 23rd, the FTSE All-Share Index fell by 33%, the MSCI World Index declined by 34%. However, optimism soon recovered by Federal Reserve announced and started printing trillions of new dollar bills. Then the DJIA and S&P 500 both closed 2020 at all-time highs of 30,606 and 3,756 unbelievably. The MSCI Global ACWI Index also had recovered to its February peak by September of 2020. Now to describe some legendary traders in the stock market history, the first and top one is Jesse Livermore, which has been considered the most famous trader. At one time, he was one of the richest people in the world. Some of Livermore's trades, such as taking short positions before the 1906 San Francisco earthquake and just before the Wall Street crash of 1929, are legendary and have led to his being regarded as the greatest trader who ever lived. His first big win came in 1901 at the age of 24 when he bought stock in Northern Pacific Railway. He turned $10,000 into $500,000. In 1906, he vacationed in Palm Beach, Florida, bought a $200,000 yacht. In the panic of 1907, Livermore's huge short positions made $1 million in a single day. J.P. Morgan, who had bailed out the entire New York Stock Exchange during the crash, requested him to refrain from further short selling. Livermore agreed, also instead profited from the rebound, boosting his net worth to $3 million. In 1908, he listened to whom told him to buy cotton while price secretly sold. He went bankrupt but was able to recover all of his losses. In 1915, he filed bankruptcy again, and later a third time. Following the end of World War I, he was even asked to the White House by U.S. president for a discussion that stopped his trading moves. And also to introduce some top famous traders, or more like investors. Predictors such as George Soros, who beat in profit huge from British Bank and Thailand country, also brought entire Asian financial crisis. Warren Buffett, who sits on a single stock and became 2 times world richest person for decades. Let's check it this way, who successfully predicted the 2008 recession and profited from it. Like Nouriel Roubini did and got huge profit from it. Other may be like John Paulson, David Tepper, Nick Lisson, etc. Okay, at last in the stock market history, they're also the short selling legalized, and it can be preceding in the stock markets. This is really a milestone of stock market history, and so relate to that, for the famous people in the history who like to short stocks, some like hedge fund managers. Under Investopedia, they mention 10 most famous hedge fund managers such as Steve Cohen, George Soros, which we already mentioned, and Carl Icahn. They are still active today, got lots of huge profit in the last few years as well. Okay, thank you for watching.